Hey everyone! Welcome to the fourth episode of the Accounting Starter series. In this episode, we will learn how to journalize transactions relating specifically to service-type businesses. Here, we will be applying the concepts we've learned from parts 1 to 3. In this video, we'll start off with a brief recap of the topics from the previous videos that would be crucial in today's discussion. We'll then proceed to learning how to make a journal entry. We'll later go over some tips and techniques to note when journalizing transactions before we apply these concepts and journalize some sample transactions. Before we begin, it would help if you refresh your knowledge of the account names from part 2. Here is a quick run-through of the account names. You can just pause the video if you need more time to go over them. Also recall the concept of debits and credits. Debit, or the left side, pertains to the value or benefits received by the company, while the credit, or the right side, pertains to the value parted with or given up by the company. Make sure you also remember the concept of normal balances, whether each element is debited or credited when there is an increase. Take note that assets and expenses have a normal debit balance, while liabilities, equity, and income have a normal credit balance. Now let's move on to learning how to make journal entries. Journal entries are recorded in a general journal like this sample here. It's like a diary where daily transactions are recorded in chronological order from the earliest to the latest date. And today we will focus on learning about making the specific entries that are listed here. Journal entries are generally made up of these parts. You have the date column where you indicate the month and the day, the particulars column where the account names affected are listed, and a brief description of the entry or transaction is indicated. We also have the debit and credit columns where amounts debited or credited are listed. The larger space on the left is for the whole numbers, while the smaller space on the right is for the decimals. Here is a sample of the completed journal entry. We'll go through the step-by-step process of making this entry. The first things that you need to do are identify the account names affected, analyze the impact of the transaction, for example, will the account increase or decrease, and then determine whether these should be recorded as debits or credits. These have been previously covered in parts 2 and 3. After completing the analysis, you may now begin recording the journal entry. First, fill in the date, the month, and the day of the transaction. Take note that the month is only written once per page, so subsequent journal entries will only have the date. Next, list all the account names related to the transaction. Make sure that all debits are listed first before the credits. Credited accounts should also be indented. After that, you fill in the amounts. Debited amounts are placed under the debit column and credited amounts are placed under the credit column. Remember that we do not place currency symbols like peso signs and decimal points when journalizing. Also, a dash is used to fill in the decimal places instead of 2 zeros when the amount is a whole number. Next, add a brief but complete description of the transaction. Make sure to include the nature, for example, is it a sale, an investment, a provision of service, and so on. The terms, for example, was it paid in cash or on account? And also the supporting documents relating to the transactions like invoices, receipts, memos, and checks. There are actually two types of journal entries that you can make: a simple journal entry and a compound journal entry. So what's the difference between the two? A simple journal entry is one where there is exactly one debit and one credit like this sample here. A compound journal entry is one where there is more than one debit or credit. So you can have one debit and two or more credits, or two debits with one credit, two debits and two credits, and so on. All of them would be referred to as compound journal entries. Now I'll share some tips and techniques which will be helpful in journalizing. First is familiarity. When journalizing, identifying the accounts affected would be kind of like having a search bar in your mind and choosing the relevant account from your mental list of all the account names. So it's crucial for you to familiarize yourself and master these names. You may refer to part 2 of the series for these. Assessing whether an account should be debited or credited would also require being familiar with their classifications, whether they're assets, liabilities, equity, income, or expense, and their normal balances. Remember that in the previous video, we discussed that assets and expenses have a normal debit balance, while liabilities, equity, and income have normal credit balances. Second, analyze the transactions. Understand what is being received and what is being given up by the company. Understand which account should be used and why it is debited or credited. A lot of students would memorize the pro forma or default journal entries for specific transactions, but I highly discourage everyone from simply memorizing these entries. There are so many types of transactions and you can only memorize so much. It would be better if you understand which accounts are being debited or credited and why these accounts are being debited or credited in the specific transaction. Third, repetition. Make sure that you keep practicing and practicing until identifying accounts and analyzing the impact of transactions become a part of your system. Be patient with yourself because everybody really starts with knowing nothing. Just take it one step at a time. Eventually, you'll reach a point where you don't even have to think so hard when journalizing transactions anymore. Now, here are some transactions or keywords to look out for when journalizing. When you see these words, they would most likely involve the following account names. First is equity. So once you see a transaction relating to the owner, for example, if the owner made an investment or a withdrawal, an equity account would likely be involved in the transaction. The owner capital account is used for increases in the owner's equity balance, usually through additional investments by the owner. The owner drawing account is used to record withdrawals made by the owner. For example, if the owner uses company assets for personal use. Second is cash. When you see the following words, collection or collected, payment or paid, settlement or settled, cash would most likely be involved. You just need to assess whether the cash is coming in or flowing out of the company. The cash account is also used for transactions involving checks since these are considered good as cash. Cash may also be used to refer to both cash in bank and cash on hand. Third is receivables and payables. When transactions are made with terms where there is a balance or an unpaid portion, the company may have a receivable if the company will be the one collecting the cash in the future, or a payable if the company is the one who owes the money. There are also variations. You may see on credit, on account, payable in how many days or months. These would all indicate a receivable or a payable. Fourth is income. When should income be recognized? On the day when the company provides the services or delivers goods, whether or not cash is collected. Recall that income accounts typically have the word income or revenue in its account name. Exceptions are DUA, deferred, unearned, or accrued income. Fifth is expense. Just like income, the expense is recognized on the day or period of the service, when the company was able to use or consume the service provided, whether or not cash payment has been made. Again, expense accounts typically have the word expense in its account name except for PA, prepaid and accrued expense. Other points to note is that deferred or unearned income is a liability, accrued income is a receivable and is therefore an asset, prepaid expenses are also assets, while accrued expense is a payable and is therefore a liability. Also take note that some transactions may also not require any journal entries. Recall that the definition of accounting tells us that we only record transactions with financial character. Transactions like hiring employees or the promotion of an employee to a higher rank do not have financial character and are therefore not recorded. Alright, so now we can proceed to applying what we just learned and start journalizing transactions. Here is a summary of all the transactions to journalize. You can look through them first before we go through them one by one. Here we'll just focus on the journalizing process itself, and we'll assume that the identification of affected accounts, the analysis of the impact of transactions, and assessment whether the accounts should be debited or credited have already been completed, since these were already discussed in the previous episodes. Okay, so let's begin with the first transaction. January 1. Michael invested 350,000 pesos cash into the company. He also invested a building with a cost of 1,500,000 pesos, accumulated depreciation of 800,000 pesos, and a fair market value of 800,000 pesos. The building has an outstanding mortgage of 200,000 pesos, which will be assumed by the company. Here are the accounts affected, the impact of the transaction, and whether such accounts will be debited or credited. There are two important things to note here. Number one, the building is recorded at the fair market value of 800,000 pesos, not the cost of 1,500,000 and not the carrying value, which is computed as cost less accumulated depreciation. Again, initial investments are recorded at the fair market value. Second is mortgage payable is recorded here because it clearly states that the mortgage payable will be assumed by the company. If the mortgage will not be assumed by the company, then it shouldn't be recorded in the company's books. To record the entry, we first list down all the accounts affected, making sure that all debits are listed first before all the credits. We debit cash and building since these are the value received by the company, and then credit mortgage payable and Michael capital, which are the value parted with. The amount of capital here is actually computed as a balancing figure, which is the amount that will make total debits equal to total credits. This is computed as 350,000 plus 800,000 minus 200,000, and we get 950,000. Remember also to fill in the date and to include a brief description of the transaction. Next, we have January 2. The company purchased office computers for its office from AB Electronics for 95,000. Terms 20% down payment, balance payable in 15 days. First, we debit office equipment for 95,000 pesos since this is the value received by the company. We use office equipment since the computers would be used for the company's office. Then we credit cash for 20% of 95,000 or 19,000 pesos and credit accounts payable for 76,000, which is the remaining unpaid balance. Take note that when journalizing, we specify the name of the other party for accounts like accounts receivable, accounts payable, notes receivable, notes payable, and so on. This is because a company typically has several customers and suppliers, and specifying the name would enable more efficient monitoring of accounts for each party. In this case, we use accounts payable AB Electronics. We also include a brief description of the transaction, which includes the terms of purchase. Again, remember to fill in the date as well. We no longer have to repeat the month since we're assuming that the journal entries are still recorded on the same page. January 3. Hired 5 employees to be paid a monthly wage of 25,000 pesos. This transaction is merely stating the fact that the company hired employees. The employees haven't provided any services yet as of today, so this transaction actually has no financial character as of now. Therefore, no entry is necessary. January 5. Purchased office supplies worth 8,000 pesos. The value received by the company would be the supplies, so we debit office supplies for 8,000. The value parted with would be the cash payment, so we credit cash for 8,000 as well. Again, make sure you fill in the date and provide a brief description. January 8. Emma's travel agency provided booking services to Hyder Corporation for 80,000 pesos. Received a 30-day 10% promissory note. In this case, we debit note receivable for 80,000 since a promissory note was given by the customer, and this is the value received by the company. In exchange, the company provided services, so this means that service income should be credited for 80,000. Again, it would be better to specify the name of the entity, Hyder Corporation, beside the notes receivable. After that, make sure you fill in the date and also add a brief description, including the terms of the note. January 10. Obtained a 1-year bank loan from DBO Bank, 100,000 pesos. First, we debit cash for 100,000, which is the proceeds received by the company from obtaining the loan. Then we credit loans payable, DBO Bank, for the same amount. Make sure you add a brief description, including the terms of the loan. Here it is due in 1 year. January 12. Emma's travel agency organized a team building activity for Charter Corporation for 110,000 pesos. Received 30,000 down payment, balance on credit. Here, the value received by the company would be the cash of 30,000, which represents the down payment, and the right to collect the remaining balance in the future, or accounts receivable of 80,000. So we debit cash and accounts receivable for the respective amounts. Then, since the company provided services in exchange, we credit service income for 110,000 pesos. Again, we also include a brief description of the transaction, including the terms. In this case, received cash with balance on account. January 15. Purchased stocks from JFC Corporation for trading purposes, 55,000 pesos. Here, the company made an investment. Since the purpose of this investment is for trading purposes, the appropriate account is financial assets at fair value through profit or loss, or simply financial assets at FAFVTPL. We debit the account for 55,000 and also credit cash for the same amount. January 15. Provided booking services to Megan Company for 40,000 pesos on account. The value received by the company here is the right to collect since the term is on account. We debit accounts receivable for 40,000. We also credit service income for the same amount since the company provided services to the client. January 17. Emma's travel agency settled the outstanding balance with AB Electronics. Here, the company is settling an outstanding balance, meaning the payable has already been recorded before. The original transaction relating to this one actually occurred on January 2, and referring to that, the unpaid balance is 76,000 pesos. So now we debit accounts payable for 76,000 to record the decrease in liabilities and credit cash for the same amount since this is the value parted with. January 18. Collected the outstanding balance from Charter Corporation. Similar to the previous transaction, this is also an outstanding balance, meaning there is an original transaction when the receivable was recorded. The original transaction occurred on January 12 and the unpaid balance is 80,000 pesos. Since the company is collecting the balance, there is a cash inflow today, and we debit cash for 80,000 and credit accounts receivable for the same amount. January 20, paid 100,000 pesos to Merville Advertising Agency for advertising services covering a 6-month period beginning February 1, 2020. Here, the company paid advertising fees for services beginning the next month. So this is actually an advance payment or a prepaid expense. So we debit prepaid advertising for 100,000 and also credit cash, which is the value parted with, for 100,000. January 23. Received 40,000 pesos from Megan Company as settlement of its account. First, we debit cash for 40,000 since this is the value received by the company. We then credit accounts receivable for 40,000, which is the value parted with since the company no longer has the right to collect in the future. January 25. Michael withdrew 10,000 pesos cash for personal use. Okay, here we see Michael and personal use. These words indicate that this is a transaction relating to the owner. What kind of transaction is this? It's a withdrawal, meaning there will be a decrease in Michael's balance. So we debit Michael drawing since this represents a decrease in the amount owed by the company to the owner, and credit cash, the value parted with, both for 10,000 pesos. January 28. Michael used his personal money to pay for the company's water bill for January, 5,000 pesos. Again, here we see the words Michael and personal money, and these indicate that this is also a transaction relating to the owner. In situations when the owner uses his personal assets like money to pay for the company's expenses, we treat that as if the owner made an additional investment into the company. So we credit Michael capital for 5,000. But since the money was paid to the water company and not the company itself, we cannot debit cash. Instead, we debit utilities expense for 5,000 since this represents the water services already consumed by the company. If you think about it, it's like two separate transactions happened here. First, Michael invested cash into the company, and with that, we debit cash and credit Michael capital. And then the company used the money to pay the bill, debit utilities expense, credit cash. Since we debited and credited cash, the account will have a net zero amount. So combining the two entries, we are actually left with debit utilities expense and credit Michael capital, which is the entry that we have here. January 29. Paid salaries and wages to employees for January, 125,000. In this transaction, the services provided by the employees was for the month of January. Since we're already at January 29, we know that the company has already benefited from the services of the employees, indicating that this is an expense. The value received by the company here would be the services provided by the employees, so we debit salaries and wages expense for 125,000. The value parted with would be the cash payment, so we credit cash for the same amount. January 31. Received electricity bill from Meralco for January, 58,000 pesos. Okay, so here the company received the bill for electricity consumed in January. So the value received would be the services from Meralco, so we debit utilities expense for 58,000. As of today, no payment has been made since it only states that the electricity bill was received. The value parted with is therefore not cash, but an obligation to pay in the future, so we credit utilities payable for the same amount. January 31. Paid janitorial services for the month, 22,000 pesos. The janitorial services here pertain to the services for January, and since it's already January 31, we know that the company has already benefited from the services. We therefore debit janitorial services for 22,000 and credit cash for the same amount since payment has been made. January 31. Rent for January unpaid as of date, 70,000 pesos. Similar to the electricity bill earlier, this represents rent for January, which was already consumed by the company, so we debit rent expense for 70,000 pesos. Since this is unpaid as of date, we credit rent payable for the same amount. January 31. Interest on note receivable as of date, 505 pesos. Here the company has earned the interest relating to its note receivable. Since the related account is a note receivable, which is something to be collected in the future, we know that the interest here pertains to interest income and is also something that will be collected in the future. Since the interest has not yet been collected, we debit interest receivable to recognize the company's right to collect in the future, and then credit interest income, both for 505. January 31. Paid for 1-year insurance covering January to December 2020, 120,000 pesos. This transaction is a bit more complicated compared to the previous expenses. Here the company paid for 1-year insurance covering January to December. This means that part of the payment pertains to services already consumed, more specifically for January 2020. The remaining part of the payment pertains to advance payment for services covering February to December 2020. To record the entry, we first make a debit to prepaid insurance for the portion pertaining to advance payment and also debit insurance expense for the portion already consumed. To compute for the amounts, we need to get the monthly payment. So 120,000 divided by 12 months, we get a monthly payment of 10,000 pesos. Advance payment covers the next 11 months, so 11 times 10,000, we get 110,000 pesos for prepaid insurance. Since insurance expense pertains only to January or 1 month, we debit it for 10,000 pesos. Last, we make a credit to cash for 120,000 pesos for the payment made. And that's the last entry for today. If you've made it this far, I just want to say thank you to you guys. And if you have any questions or clarifications, feel free to comment down below and I will do my best to get back to you. I know it's a lot to take in and it might be overwhelming at the start, but I promise you that if you keep practicing and practicing, you're going to get the hang of it and it's going to be easy for you. That's it for today's lesson. I hope everybody learned something new. Please don't forget to like, share, and subscribe to our channel. And if you have questions or requests, feel free to comment down below. And I'll see you all in our next video.